We were asking the question last time as to whether the gold subsector had made a major low. That was just this prior pivot low down here. We had seen a bounce, obviously no follow through to the upside. Big rejection week here. This is the weekly time frame, so a clear little three-leg movement high, and obviously since that time we've seen an impulsive movement down. So the mere fact that this prior pivot low has been penetrated means we're going to see a 5-wave movement down from these highs, and ideally we should come down to the 1.618 projection of wave A, which coincides with the next major multi-year area of support. So in regard to the larger degree structures, nothing changes. Wave A just commences to the left of the chart, so we have A up to the wave B. Wave B actually will quite often in this type of pattern travel 1.382 times the length of the prior leg, exactly as we have here, and from that juncture another ABC correction to the downside, AB. This is where the patterns really caught my eye, so looking for a 5-wave movement down, and at this point in time we have minor degree waves 1, 2, 3 up to the wave 4, and ideally from a pure pattern perspective at least wave 5 will run to slightly lower levels toward this 1.618 projection, showing confluence with this major zone of support on or around our next time projection. This isn't a high probability time cycle, but it is where wave C will have taken the same amount of time to conclude as wave A. So basically we're looking for confluence within those two legs, quite a common occurrence. So wave C coming down here, if it hits, I think this is the 3rd of January time cycle, it'll have taken the same amount of time to conclude as wave A. So certainly something early next year to keep a close eye on, especially if this weakness does continue and we start to see some good signs of demand at these slightly lower levels. I say slightly lower levels, it looks slightly lower on this particular chart, but it's actually in percentage terms quite a significant fall to get down to this 1.618 projection of wave A. Now we also want to see the trace of low volume continue. So we can see over the past few months volume has been declining. So declining on the way up is bearish, declining on the way down is certainly much more bullish, and if volume does peter out and then pick up substantially as we see some nice high closes at these lower levels, that will certainly be a positive sign and every reason to be looking for a trade. But right here and now we have to expect that any bounce is going to fail, especially if accompanied by low volume, and for me this is a bigger buying opportunity a little bit later down the track, maybe a month or so down the line.